Hey, how's it going, everyone? Welcome back to the Dividend Compounder Show. So what's going on with NVIDIA? Why is it going through a sell-off? In the past 30 days, they are down by -7%. This is one of the best performing stocks of all time. So what is going on? I mean, year to date, they're still up by 170%, but for the past a month to 6 months, it's just been trading flat. So if you're anything like me, then you're probably asking yourself the question, because NVIDIA is priced lower, is it a good time to jump in? Is it even undervalued? Well, we're going to go ahead and talk about all of that and more in this video. And for full transparency, I'm not an AI. This is my real voice, and I'm not an investor of NVIDIA. So I'm not going to have any bias like a bag holder might. However, if you stick to the end, I'm going to give you my price target and price prediction for NVIDIA and my thoughts surrounding the company. Alright, so to fully understand why NVIDIA is selling off, we got to give some context. So to do that, we got to talk about Broadcom. By the way, y'all are making me self-conscious because I didn't know that I was pronouncing it Broadcom, and you're making fun of me. So I'm going to go ahead and put in the effort to try to pronounce it Broadcom instead of Broadcom. Well, anyways, Broadcom, ticker symbol AVGO, at their last earnings report, they delivered a message of hope and a bright future for their company because they are now partnered with the biggest hyperscalers in the context of AI chips. And in that relationship, Broadcom is tasked with designing custom AI chips for the big dogs instead of just using an expensive NVIDIA chip, which is the industry standard right now. So in other words, you can get a more affordable chip that meets your exact needs. That type of chip is known as the ASIC, aka the Application Specific Integrated Circuit. What this implies is that NVIDIA no longer has a dominant monopoly in supplying AI chips. Broadcom is here to take away a large chunk of the market share, and that's why Broadcom's stock is soaring. Sorry, I think I just pronounced it Broadcom. But anyways, their stock is soaring, and NVIDIA's stock is shrinking, as we just witnessed. Wall Street is moving their money from one company and into the other. It's like when you have that very overweight loved one that comes over to your house and they eat 90% of the Christmas dinner by themselves, leaving everyone else with the scraps, and you're expected to act like you're full of holiday cheer. I mean, when you look at the key facts from their earnings report, their revenue grew by 44% year over year. Their AI revenue grew 220% year over year. Broadcom has just emerged as a legitimate threat to NVIDIA. Now listen, I'm not a semiconductor engineer. I'm just a potato that has multiple degrees. However, from my understanding of the industry and what's going on, if you have a need for a complex machine learning, then you gotta go with NVIDIA chips and utilize that CUDA framework. However, if you're looking for some more basic AI features that are customized to what you need, if you're Google, Amazon, or Apple, then you're going to go with Broadcom, the more budget-friendly option. Then that leaves us with AMD. They're trying to compete with NVIDIA in providing the most advanced and complex AI chips at a premium price. Unfortunately, in my opinion, AMD's sales and marketing team is losing the race against NVIDIA. And between you and me, AMD needs to step it up to gain more market share. And I say that because AMD is playing catch-up while NVIDIA is trying to hold their position as AI chip leader #1. And I'm balls deep into AMD at about $125 a share, but I'm not even worried. I know they're going to be okay. And if you want to know why I feel okay, then watch my DD analysis video about AMD. And we'll see what happens because at the end of the day, Wall Street is infatuated with Broadcom at the current moment, but anything can happen. Alright, so now that we understand why NVIDIA is selling off, is it still a good time to jump in? To figure that out, let's go ahead and look at their numbers and finances, which I love to do. I hate talking about the speculative and the theories and the future forecast. I don't like that. I like to look at the data, the numbers, and what's objectively happening with a company. First and foremost, when we take a look at NVIDIA's adjusted stock price total return, because hey, performance matters, their year-to-date is 163% return, which is phenomenal. So if anyone is freaking out, dude, you just gotta zoom out and look at it bird's eye view. They're just going through a temporary sell-off. And when we zoom out to 3 years, then the total return has been 370%. And when we do 5 years, that's 2,100%. And at 10 years, dude, you're talking about a 25 1,000% return. So this is a company that is worth investigating, if not for anything else, the total return and the performance. It has a proven track record of growing in the stock market. And yes, past performance is not indicative of future gains, but a company that is growing at this scale and at this pace shows that they're capable of doing it again and again. As you can see, 10 years out, 15 years out, 5 years out, it doesn't matter the lens. This company is going to keep going up and up because in their DNA, they are the forefront runners of innovation, AI, and GPUs. So what I'm saying is that they back up all the hype with tangible results and objective metrics through their products and services. This is not just a company that has shaky finances, right? They're actually growing in all metrics year after year, which takes us to their financial page. Let's take a look at that right now. And before we dive into their balance sheet, I do want to call out that people are mistaken when you are evaluating AMD or NVIDIA by looking at their current PE ratio. When you look at this and say, oh my gosh, it's a 51, this is too expensive. Or when you look at AMD's and say, oh my gosh, it's over 100, it's expensive. That tells me everything that I need to know about you. You don't understand how to evaluate growth companies. When you look at a growth company, you don't look at this number, the present tense. Instead, you have to look at their forward multiple. So NVIDIA, their forward PE ratio is a 33. And on the other hand, for advanced micro devices, AMD, their forward PE ratio is a 27. All things considered, the S&P 500's average PE right now is a 30.8. So AMD is undervalued in comparison to the rest of the S&P 500. Likewise, along with that same wave of thought, NVIDIA is slightly overvalued in comparison to the S&P 500. A 30 PE ratio, NVIDIA's is a 33. Now, with that out of the way, let's go ahead and look at some numbers. The first thing that we're going to be looking at is their income statement. When you look at their top line, this is what investors refer to as the revenue. Just look at the magic that is happening year after year since 2020. In 2020, they posted $10.9 billion. But then the next year, they grew that by 52%. And then the following year, they grew that by 61% to $26 billion. And then in fiscal year 2023, it kind of stayed flat at $26.9 billion and only grew by 0.22%, which is pathetic. I agree with you. However, they rebounded and they skyrocketed and they grew their revenue by 125% the next year to $60.9 billion. And you're thinking, okay, NVIDIA, that's pretty impressive. Can you do better? Yes, they grew their revenue in the past 12 trailing months by 152%, and their revenue is now $113 billion. Yes, we're talking about billions of dollars. This is not thousands, this is not millions. This is billions of dollars. So they are proving it on paper that their hype is warranted because they have the numbers to back it up. And this is just the top line. If we move right along to the balance sheet, and in the balance sheet, my priority is taking a look at their cash situation and the debt picture. So it looks like when we take a look at their cash and cash equivalents, they have about $38 billion of cash on hand. And when we scroll down and assess their debt situation, their total debt right now is $10 billion, which is telling me when we look at their net cash to debt, they have $28 billion of cash left over, which tells me if they really wanted to, NVIDIA can pay off their total debt 4 times in a row with the cash that they have right now. And speaking of cash, when we look at their cash flow statement, what I am trying to assess now is their free cash flow situation. And when we look at their free cash flow, it is nothing short of beautiful. This is what you want to see in a company. Their cash flow for the past 12 months is $56.5 billion, which means they grew that by 200% year over year. So NVIDIA is heavy in cash, low in debt, their revenue is growing at an astronomical rate, their free cash flow went from $4 billion in fiscal year 2020 to now $56 billion of free cash flow, and you're telling me that this company can't grow anymore? Dude, you're out of your mind. And before you think I'm biased towards NVIDIA, dude, I'm an investor of AMD. I have 0 shares in NVIDIA. I don't have any skin in the game. But when I recognize good game, I gotta give props to where props is due. And NVIDIA's financials, fundamentals, and balance sheet, dude, it looks amazing. And then when we evaluate their dividend profile, you're not buying NVIDIA for that dividend. Instead, you're buying into NVIDIA to get 50, 60, 80% rate of return in a single year. But with that said, each share of NVIDIA pays a dividend of 4 pennies every single year. But are you really going to be crying and upset that they only pay a 0.03% dividend yield when your stock and your growth and your appreciation is going up by triple digits? No, of course not. And the last thing that I want to say about their dividend is that their dividend payout ratio is 1.5%, meaning it's sustainable, it's healthy. And if this company really wanted to and pivot into being a dividend company, they have so much cash on hand to increase the dividend at a rate that would make your nipples absolutely rock hard. But as we look at their situation right now, they're not in the game of trying to be a dividend company. Instead, they're grandfathered in to that dividend mindset and they don't want to cut it because at a 1.5% payout ratio, they can pay it. It's pennies to them. They can just pay that dividend and not face any backlash for cutting it. But right now, NVIDIA is focused on hyper growth rather than their dividend profile. Does that make sense? And last but not least, when we take a look at their margin to assess their profit situation, it is nothing short of fantastic. Their gross margin is just shy of 76%. 76% gross margin. Are you kidding me? The net margin is 55%, meaning that's the profit left over after paying for all of the operational, overhead costs, and any other expenses. 55%. My goodness gracious. How much more beautiful can a company get? So before people want to leave me a silly comment saying, hey man, I think NVIDIA is overvalued, you're out of line here, I'm not even offended. I know, they're delusional. They're the same type of people to take a morning dump and not wipe and walk around with a crusty butthole all day. I'm not offended. If that's you, leave that comment. I don't care. NVIDIA is beautiful. This is, my goodness, why am I not invested in it? That's the bigger question, which is a perfect way for us to transition into the next segment. The bottom line of my price target for NVIDIA for 2025. I think at the end of 12 months, at the end of 2025, realistically, I can see NVIDIA reaching $160 a share. Currently, they're trading for $130. And am I crazy to think that if everything goes in NVIDIA's way and they just blow everything out of the ballpark, that NVIDIA can't reach $170 a share? I think that's really within reason. So realistically, I think they're definitely going to hit $160 a share. I don't have a genie bottle or hold a magic ball that tells me the future, but realistically, come on. 160 is not out of the picture. Within reason, I'm guessing 170. And Wall Street thinks that NVIDIA should be 167 a share. However, with that said, my whole thing is, right now, I'm not going to be buying into NVIDIA because the upside to risk ratio is it's just not worth it to me. But at the right price, I'm going in. You better believe it. With NVIDIA going on this slow, declining sell-off, if they reach a price of about $119 to $116 a share, that's going to be my buy-in price. That's when I'm going to start a position into NVIDIA. So when they reach $116 to $119 a share, that's when I'm going in. And I'm going to be selling other stocks in my portfolio in order to gather up available capital to deploy into NVIDIA. I think it's a phenomenal company. So at its current price of about $130 a share, NVIDIA, I just think there's better and other opportunities in the stock market, mostly AMD. Watch my DD video as to why I feel so bullish about the company. And for those of you who care enough to see my work, this is how I reached my price target for NVIDIA. The multiples valuation said 105, the discounted cash flow analysis model said 159, and the grams valuation said 170. Which told me that the intrinsic value is 159. I just rounded up to 160. Wall Street says 167. And then to calculate my acceptable buy price with a margin of safety baked in, I need a 25% margin of safety, at which point my buy target is $119 a share. All that to say, there's a lot to like about NVIDIA, and I don't think their growth story is over just yet. So consequently, I like what I see and hear about the company, so if the stock reaches my price target, I'm going to be jumping in. And remember, buying a stock and simply hoping it goes up is gambling, my friend. That is gambling. True investing means you're digging into the numbers. You're understanding and analyzing the financials. You comprehend the fundamentals, and you have a solid investing thesis. And remember, on surface level, a stock might look cheap, but without the research to back it up, you don't know if it really is. It might be a value trap, and that's coming from a value investor. In other words, what I'm trying to say is that I believe in the future of NVIDIA. I mean, just look at this Wall Street Journal article. Broadcom's AI success won't all come at NVIDIA's expense. The fact of the matter is, when you look at their revenue breakdown for their AI chips for data centers, NVIDIA just takes a hot steaming dump all over Broadcom, right? For the next year, the projected revenue for NVIDIA is going to be $183 billion just from the data center AI chips. For Broadcom, that's going to be $16 billion. And then in 2026, look at the difference, right? And then in 2027, look at the difference again. However, they're both going to mutually benefit from making their specific chips. With NVIDIA, the one that's wired for the CUDA framework, and then for Broadcom, the custom AI chips that are more budget friendly and don't perform as well. They're both going to thrive. Anyways, I love you guys. I'll talk to you really soon. Stay safe. Peace.